Number of things we should understand simultaneously. If you have brought the laptop, please work on this one. Okay, you can just work on according to with me only. Obviously, otherwise you need to carry certain things from today's session. Number of things we should understand simultaneously. Make a note for each and everything. If you have brought the laptop, please remember everything. Okay, you can just work on according to the 30 on this. Is it clear? Obviously, otherwise you need to let us start working on this particular number of things we should understand. First, financial statement. Okay. So first, what we are going to do, we are going to understand the format of financial statements. Obviously, otherwise let us start working on this particular number of things we should understand. First, financial statement. Okay. Then, so first, what we say financial statement. What are the things will come? Income statement, balance sheet, and last one is what? Cash flow statement. So three things you should understand. Is it clear? How many statements are there? Three statements. What are those three statements? Income statement, balance sheet, cash flow statement. Now, how to do a model for this, all these things we need to understand here. Okay. The first statement which we are going to discuss, that is called which statement? Income statement. So let us quickly see the format for income statement and then we'll carry on with the preparation of model. Let's check income statement. How do we start? Always we start with what? Revenue from operations. So whatever revenue which is available with me, that I will take as revenue from operations. Then from this, what we'll do, we'll minus less cost of goods sold. So we'll deduct from this one, cost of goods sold. Now, first we need to have a format. Then if you have a format, then only you can prepare a model. Now, once again, the challenging question is here. If you don't know the format of any models, then you cannot do in 30 marks execution. Okay, ready-made templates will be not given in the examination. You need to create a template and you need to forecast for the income statement. Is it clear? So next, when we deduct revenue from operation over here, what do you get next item? Revenue from operation minus cost of goods sold. What do you get balancing figure? Gross profit. So we got the gross profit here. Next, after gross profit, once we completed, then again we need to deduct certain items. So what we'll do here? We'll deduct something called as what? Cash operating expenses. So we'll deduct this one, cash operating expenses. Now, once you deduct these cash operating expenses, what do you get? EBITDA. What is EBITDA full form? Earning before interest, tax, depreciation, and amortization. So we got the EBITDA value over here. Now, once again, EBITDA is not particularly actual profit for me because it includes non-cash expenditure called as what? Depreciation and amortization. So what we should do? Again, we should start EBITDA. Always start from right hand side. It means what? First, we need to deduct which one? Depreciation and amortization together. Depreciation is what? What is the meaning of depreciation? The value which is which is leftover portion, or we can use that value for replacing the old asset. That is becomes your what? Depreciation. Or we say depreciation is a charge on profits. When depreciation is there, profit will come down. So now we got the EBITDA value. So let us first deduct depreciation and amortization. So after EBITDA, less depreciation and amortization. Why it is called amortization? Because it is on intangible assets. So we'll deduct here this one. Now, EBITDA we got. From the EBITDA value, we got deducted depreciation. Tell me what you left? EBIT, that is earning before interest and tax. Next, then finally after that, once we get total equity. We get total equity. So what is the meaning of equity? We say total equity, no? I did not write as total equity share capital. When I say only, it will call as share capital. But I am writing equity. What does it mean? Equity means which comprises of share capital and reserves and surplus. We call as equity. Understood the term? What is the meaning of equity? Now, Equity is one source of fund for me for the business. What is the another source? Debt is another source. So it means again debt are how many types? Two types of debt. Nothing but total debt we can divide into two categories. First one is something called non-current liabilities, and one is something called as what? Current liabilities. It means liabilities. Two types of liabilities, non-current and current liabilities. So after total equity, we will leave one line here and we will start first non-current liabilities. Then we got total non-current liabilities. Then we will take current liabilities. And then finally we got equity and liabilities. So finally we will get total of equity plus liability. So we will call this one as my total. Now tell me total what? Equity and liabilities. So we should say this is as total of equity and liabilities. So liability side is completed now. Now we should always remember what is the accounting equation. How do we write accounting equation? Assets should be equal to liabilities. Yes or no? Or asset can be equal to equity plus what? One is equity we take and total liabilities. That also can be one asset. So whatever I will get money from equity source or total liability debt, I will invest in where? Assets only, buying of fixed asset. So that also can be framed. So equity. So let us go to the now asset side. So we will write here assets. So next asset side we'll go here and we'll write down again. Assets also divided into how many types? Two types of assets. What are two types of asset? Current assets and non-current asset. We don't say fixed actually, but we say like this. Assets are two types. What are those? First one is non-current assets and current assets. Under non-current asset we have what? Fixed assets, right? Again, fixed assets are two types: tangible assets and intangible assets. Is it clear, everyone? Concept of. So when you say fixed asset, it's nothing but ultimately non-current asset only. Total of total asset, tangible asset plus intangible asset will give me fixed asset. And fixed assets are all called as what? Non-current assets. Now, another type of asset is current assets. Current asset means the asset which are kept for how many years or converted into cash within how many years? Less than 1 year. So we call this what? Less than 1 year. The asset which can convert into easily cash, which becomes what? Current assets. Less than 1 year. Now tell me, fixed asset, building, land and all will take time. We need to buy this or we need to find the dealer for that, all those things. So it means the asset which is kept for more than how many years? 1 year. That becomes my fixed assets. Now let us write down first non-current asset here. Non-current assets. After non-current asset, we will write as current assets. Next, after this one, you will also have something called as investment also can be done by the company. So investment is also asset or not for the company? Yes. So company will do investment. See here, investment is a little bit kind of a ambiguity is there. When they say investment, so what do you mean by investment? You have written only investment. Investment can be two types, no? Short-term and long-term investment. Now, whenever I am writing only investment, we assume that company always do long-term investment. It's a long-term investment for the company. Okay? Because what happens now here when you are taking investment, investment is what? Investment in other companies' shares, investment in other companies' debts, or investment by giving some other kind of loans, advances. Company can also give inter-loans, right? That is called inter-corporate debts in the organization. Okay, so total non-current asset, current asset, investment will give me the total of what? Assets. So this becomes my completion of what? Balance sheet statement. Okay, so equity and assets both should match. So finally it will get tally, that is equity and your asset side. Now, what is the next? One more statement is there, cash flow statement. So next, let us give heading cash flow statement. So next type of statement is my cash flow statement. Now tell me, cash flow statement will record only which items? Cash items. It's nothing but cash related transactions over here. Now cash flow statement involves how many activity? Three activities. What are those three activities under cash flow statement? First one is operating activity. Next one is what? Financing activity. Next one is what? Tell me. Investing activities. Everyone, have you studied or not this one? Cash flow statement. So how many types of activity we have? Three types of activities. Operating activity, financing activity, and investing activities. So what we'll do ultimately, we calculate here what is the total of each activities. We find out what is the balance here. Operating activity plus minus plus. Whatever the answer will get, we'll calculate cash and cash equivalent at the last. So these are statement of what? Your balance sheet, income statement, and cash flow statement. Is it clear, everyone? All of you understood the format now? Okay. So now based on this one, we need to create one model on income statement. We started with which one? First one, income statement. So let us do now income statement format. We have discussed here, and according to that, we'll solve now one particular models here. How to do this one? Let us see. Okay. So now this is one question for you people. This is the template which I have been designed. According to that, we'll solve this one on the models over here. Okay. So I hope this is visible to you, all of you. So now how to solve this one? Okay. Now this is particular year 1, year 2, year 3, year 4. First statement we'll discuss, we'll prepare something called which statement? Income statement. So this is the first model we are going to discuss now. Okay, now income statement for how many years? 4 years. We are going to prepare your models. Okay, so let us start working one by one. Okay, now how to prepare this? This is a template which is ready-made template. Okay, now based on this template, you need to fill all the answer over here. How to do this one? Let's say for example, you need some base for this to create or not. Okay, right side look at here. How many years of information we have? 4 years. Year 1, year 2, year 3, year 4. Okay, all of you. If you're doing in laptop, you can do it. Otherwise, calculator, I am expecting you to keep it here. Okay, if suppose calculation comes here. Okay, let's imagine I am preparing an income statement format model for one of the company which is in the hotel business, which is running over the period of time. Okay, according to that, how to build the model? Okay, for this particular company. Now let us see. First, tell me, our income statement always, just now we discussed the format of income statement, no? It's always starts with revenue from operation. So I will write here, first item under income statement is revenue from operations. So first item is revenue from operations. So now how to do revenue from operation means sales. Ultimately, this is talking about what? Sales only. Okay, now to calculate this one, we require come to the right hand side. Okay. Now, can you see here how to calculate sale? Let's say this is a hotel business. Okay. New customer in a year there were 75,000 customers were visited in a year, and revenue per customer is how much rupees? 40 rupees. So it means every one customer we had from them we have earned how much rupees? 40 rupees. So 75,000 customer means how much we have to calculate it. So now how to calculate this one? Let us see here. Take is equal to how anyway in Excel whenever you are calculating any kind of formula syntax when you are typing always start with is equal to. So now tell me what should I take? Normally when I am doing in the manual in notebook, what I will do? 75,000 into 40 I will take. Excel also do the same thing only. Apply the logic what you are going to do in notebook. So what you should do, you want this item, no, 75,000. So I took 75,000. Then I usually we do multiply, right? So in Excel multiply is nothing but like this. It will come as a what? Star mark. So this is what the total number of customer into each customer. What is the revenue I'm earning? 40 rupees. So what we should do here? I can write here 40 also. Whatever G3 I have selected into 40. So what is the answer I got? 30 lakh rupees. So each customer for year one, my total sales is how much rupees? 30 lakh rupees. So now same thing what we need to do here. We need to take the calculation for which year? Year 2. Tell me, year 2 how many customer? 1 lakh 20. 1 lakh 20 into 40? How much? 48 lakh rupees. Almost it will come to 48 lakh rupees. So now how to do this one? You can easily drag it on the right hand side. Can you see that you got all the answer here? Now how to drag it here in the Excel sheet? Just keep it here. First answer you should calculate. One base is required. Then there will be a plus sign will come here. There is a it's called autofill handle. You just drag it on which side? Right hand side. So you got the revenue from operation. Okay. So let us first item is clear. Can you see after revenue per customer? What is the next one? Refund. Refund means what? Returns. Refund means what? Return. So now tell me, can I say this revenue from operation is my gross sales? Because we want always which sale? Net sales. So how do you get net sale? Gross sale minus sales return. So first what we'll do here, less, can we write here refund? So refund we'll calculate. Now how to calculate? Always we should type is equal to, take the value of how much. Now tell me, what is the refund we are calculating? Here, what I told refund here? 5%. Now tell me, 5% they are told. Always it will be calculated on gross sales. So what is my gross sale for first year? Can you see here, first year gross sale is how much? 30 lakh. So you should select this 30 lakh. Tell me, refund is how much percent? 5%. So into 5 percentage. Into 5 percentage. What is the answer? 1,50,000 rupees. Now what we should do, just you keep it here, look at here how to drag it, right hand side you just press it and drag it. Did you got all the answer? Yes. So we got revenue from operation minus what? Refund. Let us do one more. What is the next item they are telling? Discount. Again we have given discount to the customer. Again it's a loss for me or not? Yes or no? So what we'll do, once again one more item we need to minus that one. Write down here something called as what? Discount. Now tell me, discount, what is the information they given? How much percent? 8%. Tell me, what is the calculation will come? On gross sale, you should calculate how much percent? 8%. Can you tell me 30 lakh rupees, 8% how much? Orally you should tell. 30 lakh into 8. 2,40,000. So I should get answer of how much? 2,40,000. So select this 30 lakh rupees, multiply with how much percent refund? 8%. Just write here 8%, you will get 2,40,000. Then what you need to do, drag it on right side. Did you got the answer everyone? Yes. Next, refund. Any other information is given here? No. So that's all. After that, cost of goods sold we have to calculate. Tell me, revenue from operation minus refund minus discount. What you will get? Net sales. This is my net sale item. So we will write here something called as net sales. Now tell me, net sale how to calculate? Here. Now here I have not put minus sign, so I cannot use some formula here. If I put minus sign, I will use some here. Now just I kept as it is. 30 lakh is my gross sale. Gross sale minus 1,50,000 minus 2,40,000. Okay. Manually, how do you do? Take 30 lakh. Then from 30 lakh, I should minus 1,50,000 also. Again, I should minus what? 2,40,000 also. What is the answer? 26,10,000 rupees. Did you got the answer for first one? This is called which sale? Net sales. So what we should do in Excel, the beauty is only one thing, you get all the answer automatically. Is it clear? So we got all the answer called as what? Net sales. Next, now tell me, net sales we got here. Okay, now after net sales, what we have to do? Cost of goods sold. So let us do one by one. What is cost of goods sold? Can you see on the right side here? Look at here. What is the given information? Opening stock. Remember cost of goods sold, how to calculate? Basic formula for COGS. Always we should take which stock? First one. Opening stock plus purchases minus closing stock. Whatever the answer you get, that is called as what? Cost of goods sold. Yes, so let us do the same. Now opening stock is how much percent here? 35%. So 35% on what? Gross sales. So we have gross sales of, let us come here on the left hand side here. we got cost of goods sold. First item, we will write here something called as what? Opening stock. So we will write here opening stock. So opening stock is equal to, we have a gross sales of 30 lakh into how much percent? 35%. So we got how much answer? 10 lakh 50,000. So drag it on right side. Next, after opening stock, what is the next one? Purchases. Again, purchases is equal to how much percent? Can you see on the right side? Purchase is how much percent? 5%. Again, this purchases of which sales? Gross sales. Gross sales for first year is how much percent? Total 30 lakh rupees. So let us take here is equal to, how do you should do? Take this 30 lakh, my gross sale, into how much percent? Purchases is 5%. So right into 5%. What is the answer? 1,50,000. Can you drag it on right side? You will get all the answer. Now tell me, opening stock over, purchases over. What is the next one? Closing stock. So let us write here closing stock. How to calculate closing stock? Now first we should see what they have given information. Closing stock is how much percent? 3%. So let us take here closing stock is equal to on 30 lakh how much percent? 3%. So into 3% you will get how much? 90,000. Now what we should do? Drag it on the right side. Now can we calculate COGS then? Yes or no? So now tell me COGS, what is the formula? Opening stock plus purchases minus closing stock. Tell me 1 lakh 10 lakh 50,000 opening stock plus purchases, we should type in between, then minus closing stock, you will get 11 lakh 10,000. This is the answer for cost of goods sold. You drag it on right side, we got cost of goods sold. Understood everyone how to calculate this one? Tell me till now how many people understood? Raise your hand. Got the concept clarity? Okay, now we got net sale, cost of goods sold. Can we calculate gross profit or not? Next item after this one, can we write here gross profit? So now gross profit, how to calculate? Net sales minus cost of goods sold. Now just see here, what is my net sales here? First year, 26 lakh 10,000. So I'll highlight here, net sales is 26 lakh 10,000 and cost of goods sold is how much first year? 11 lakh 10,000. So gross profit is equal to, take the total net sales minus 11 lakh 10,000, you will get the answer 15 lakh rupees. So total gross profit I got 15 lakh rupees. What we should do after this one? Take this small color, black color plus, drag it on right side. Just one time you have to do that one. After that, just drag it on right side. You will get the total of all the answer. Is it clear, everyone? Okay. Next, afterwards, next come to this one. After gross profit, we need to deduct which one? Cash operating expenses. So can you see information is given on operating expenses? Let us see. Now, first give heading below this one. Operating expenses. Just write out here operating expenses. Under that, what is the first expenses? Administration expenses. Next one is what? Marketing expenses. Next one is what? Other expenses and depreciation. How did it came automatically? There is an option called as flash fill. It will come automatically all the item which will take from that cell. Okay. So ultimately we will write here how to do now this administration expenses. What is the information is given? How much percent? 20%. Every year there will be a 20% of administration expenses on gross sales. So let us calculate what is my gross sales is how much percent is equal to, what is that gross sale? 30 lakh. So 30 lakh into how much percent? 20%. So you will get, now this, if you get such kind of problem, what you should do? Click on numbers. You will get the answer called as 60 lakh. Almost how much it is? 6 lakh rupees. Okay. Now what you should do? Drag it on the right side. You got the answer of which one? Administration expenses. Next, after administration expenses, what is the next item? Marketing expenses. Can you see marketing expenses how much percent? 10%. Again, we should calculate marketing as a total of gross sales. So is equal to, take 30 lakh rupees into how much percent? 10%. So you will get around how much rupees? 3 lakh rupees. Now again, drag it on right side. You will get all the answer. Is it clear? So it will automatically take the gross sales only on the heading. Okay. Next. What is the next one? administration, marketing, over. What is the next item? Other expenses. Can you see here other expenses? How much percent? 5%. So again 5% of what? Gross sales. Okay, now let us see how to calculate here. Is equal to, what is gross sale? 30 lakh rupees into how much percent? 5%. You will get 1,50,000. So now again what you should do, drag it on right side. Did you got all the answer? Now tell me. Calculation only. First asset. What is the value of first asset? 75,000. Salvage value is not given. So 75,000 divided by 5. So we should calculate 75,000 divided. Now tell me each year how much depreciation then? How to calculate? Come to year one, because first year no. So year one we have to calculate depreciation on furniture. So select this 75,000, divide, you have to press for how many years is the life of the asset? 5 years. So each year how much is the depreciation? 15,000 rupees. Now tell me, life of the asset is for 5 years, but we with decimal and or round of value. Is it audible? Now afterwards what happened? Now you see. Now tell me, this 50,000 is for how many years of asset? 3 years. Means this asset will continue for next 3 years. After that, there will be no existence of that asset. But next asset in the second year, we purchase 1 lakh rupees of asset. That will be for another 3 years. Next, another fourth year, we purchase one more asset of 3 years. Again, it will be for how many years? 3 years. So now let us calculate the value for this one. Okay. Not visible.
Now it is fine.
So that is what the total depreciation will get for the fourth year. What is the answer? 66,666. Why there is a less? Because one asset is gone already here. So that is why depreciation came to 66,667 rupees. Done? Understood everyone? Now let us do it for which asset? Vehicle. Now tell me, vehicle, when did we purchase? Can you see the date here? Life of the asset for vehicle is how many years? 6 years. But vehicle, did we purchase first year? No. Second year? No. Third year we purchased one vehicle for the company. That is for how much rupees? 30,000. Tell me, depreciation will it come for first year? No, because there is no asset of vehicle on the first year, so depreciation will not come. What about second year? No. Third year? Yes. So on third year, we should charge depreciation. Now tell me, how much will come? 30,000 divided by 6. Tell me, how much 30,000 divided by 6? 5,000 rupees. So every year, so I will write here 0. There is no asset here. There also nothing depreciation first 2 years. So is equal to, I will take 30,000 divided by 6. You will get the 5,000 rupees. Understood everyone? Now tell me, fourth year, everyone. 65,000, 1,03,000, 86,667. Now what we should do? Tell me, depreciation is a cash expenditure or non-cash? Non-cash expenditure. What we should do? Take this all the values, okay? Or we can. I'll show you one more shortcut for this one. We have depreciation. We should keep here, no? Is it visible? Last this one. Now here it is actually depreciation here. Okay. So now depreciation for first year. How to calculate here? Type just is equal to and take that value of depreciation. Can you see here? There was a depreciation here. 31,667. Just enter. You will get the automatically value over here 31,667. So now what we should do? Drag it on the right side. Did you got all the answer here? Automatically it will come depreciation. Now depreciation is done. Now can we calculate EBIT? So let us calculate now EBIT now, total gross profit minus operating expenses. Now, but before that we'll take the total of what? Operating expenses. How to take total of operating expenses? We have to take sum is equal to type here sum, open the bracket, take the total administration, marketing, other and depreciation. Total will take all the expenses. You will get 10,81,667. So this is the total expenses. Just what you have to do, drag it on the right side. So you'll get the total operating expenses. Okay. Now, gross profit minus operating expenses, what do you get? EBIT. Okay, because directly we have taken year only, no? What is the value of depreciation? Also, we have taken year only. So directly we can calculate one step, we can remove depreciation less. Ultimately, I will take year only directly minus year. So what I will do? EBIT I will calculate. Now, how to calculate EBIT now here? We have got total operating expenses, whichever available in the company. So now tell me how to calculate EBIT is equal to, can you see what is the gross profit? 15 lakh rupees. And total operating expenses, gross capex. We have two types of gross capital expenditure and net capital expenditure. Okay. Gross asset we call as net asset also. We have heard these terms. 0 year. What is the expenditure? 5,700. Now, on this, how much percent I need? 10%. That is the rate of depreciation. Now, what we should do here? We want 10% every year. We are going to charge depreciation on this. So now this gross capex, I need to calculate depreciation. Only for depreciation, I can calculate this all. I assume that these are all my fixed assets, right? Okay. What we should do? These are in column, right? This is in which form? Column. But I need in which one? Rows. How to do this one? First, we should copy all this. Okay. So let us copy this one. All this first copy now. Control C. Now just go to the right side of this one. Okay. Here, come to this value. First, you copy this one and then paste it. Now right click. Right click. Now remember, I copied in column, no? But I want that into rows. How to do? There is a function called as transpose in Excel. What is transpose will do? It will convert the column into rows. Now, where do you find this one? 1, 2, 3, 4. When you right click on the option in your mouse, 1, 2, 3, 4. Fourth option called as transpose. Did you see? There is a transpose. Just click there, transpose. Now can you see? All column has become what? Rows. Now on this, can I say these are all my fixed asset values? On this, how much percent? 10% depreciation. Now can we apply easily formula here? Now tell me, how to calculate depreciation? 5,700 into 10%. So is equal to 5,700 into you press and 10 percentage. Can you tell me how much answer? 5,700, 10% is how much? 570 only. So the answer will come 570. Now, instead of calculating one by one, can I drag it on which side? Right side. So we'll get all the answer or not. So let us see how to calculate for remaining. Just click here. Did you got all the answer? You see, all have 10% fixed because rate of depreciation is also fixed. Now, what we should do? This depreciation I want here, right? That is nothing but where depreciation and amortization. There, how to bring? Type first is equal to. Type there is equal to. Now tell me, first year depreciation is how much? First year depreciation how much? 570. So first you should click on 570. Just click here, enter. Is it came? Can you see that? Now what we should do? No need of typing one by one. Just click here and drag it on right side. All the answer will come automatically. Is it not? Now we got depreciation. Now tell me, depreciation is plus or minus? Minus, no? So I want which sign here? Minus sign for each item, right? How to put minus sign? Just double click here. Just double click. Now here is equal to M9 is there. Now where to put minus sign? After is equal to, you should press minus sign. Enter. Now you got minus 570. Now once again what you should do, select this 570 minus and drag it on which side? Right side. All plus has become which side? Minus side. Now after this one, depreciation is deducted, right? Now tell me, EBITDA minus depreciation, what do you get? EBIT value. So EBIT. Now tell me EBIT how to calculate is equal to sum. Because why? See, you know where we are using sum? Whenever there is a minus sign is already inserted, we should use sum. Sum will give you the net answer. So plus into minus, minus will come here. So now is equal to sum, open the bracket, select these two values, close the bracket, enter. Did you got 8,830? That is the answer. Now I want remaining for all the answer. What you should do? Drag it on right side. So just take this value and drag it on right side. Now tell me, do we have decimal in the year 2? Just select these two and reduce by 1. Tell me. We are calculating this one DCF model. Remember income statement and DCF to the certain extent same. After that they will change the root. Okay. Now here onwards it will remain same like an income statement. After that it will change the root. Right. Now here EBIT. In income statement we will deduct what? First what? Interest. But here we don't deduct interest. We deduct what? Tax on EBIT. So what we'll do now? Less tax on EBIT. Now, how to see tax on EBIT? Can you see here? Right side. You will get all the answer. Now you tell me from this cash flow, what you will do first? Less capex. Now, here we should deduct what? Capex. Less capex. Capex means capital expenditure. Okay. Now just go to the right side. Can you see? Do we have capex here? All the values of capex in the zero. How much is the first year value? 5,700. All this value I need to less here, right? Yes or no? Now how to do this one? Already I have copied here. Do you remember here? All the values I have copied here, right? So what I should do here? Just you take it is equal to, you press here, and then what you should do here? Select this 5,700. Press enter. Did you got the same answer here? 5,700. Then what we should do? Drag it on the right side. You will get all the answer here automatically. Yes or no? So what I have made simplified, my work simplified. I have converted the column into rows. That becomes your life very easy. Right? So now based on this one, what we need to do for the calculation? Now we have to do less capex. Again, less what? Changes in working capital. So let us do now here. Write down less changes in WC. What is WC? Working capital. Now let us see. So we need working capital information for that, right? So can you see here, all of you? Do we have working capital here? Now here the things will get changed for working capital. Remember, what is working capital? What is the meaning of working capital? Current asset. Usually how do we calculate? Current asset minus current liabilities. We calculate that, we get as what? Working capital. Now there are two types of working capital: gross and net. Gross working capital and net working capital. Everyone know that? Okay. Now you see. Working capital at the beginning of the year. But remember, heading is what? Changes in working capital. Heading is what? Less or add. Changes in working capital. Changes means what? How much changes happened from previous year to current year? From previous year to current year. Whatever the difference is there, that difference is called changes in working capital. Now, all of you concentrate here. 0 at the beginning of the year, at the first year end. First year working capital was 1,280. Now it has become how much? 1,290 rupees. Now tell me, 1,280 to 1,290 working capital has been increased or decreased? Increased. So we say it is an increase in working capital, right? Working capital has been increased. Now, for example, let us take this value. Okay, for your understanding. What was year 5? 1,600. Now you see, how do we calculate? Now the changes is nothing but this is my current year. 1,290 is my year 1, right? So year 1 minus year 0 then. So current year minus which year? Previous year then. Yes or no? Now tell me, 1,290 minus 1,280. What is the change? 10 rupees. 10 rupees working capital has become increased, no? It has increased with 10 rupees working capital. Yes or no? 1,280 to 1,290 means from previous year to current year, there is a change has happened, that is for 10 rupees. Correct? Now, look at here. What is happening in year 5? So, current year is 1,600. It has become how much? 1,600, right? Previous year is how much? 1,450. So it is 1,450. Now tell me, from previous year to current year, is it increase or decrease? Increase or decrease? Now you see, year 5, 1,600, and year 4 is 1,450. So year to year it is increase working capital. Once again, there is an increase in what? Working capital. How much is the increase? 150 rupees of increase here. Now, suppose for example, if I say current year and previous year, current year is 1,200 and previous year it was 1,800. Can I say like this also? Last year it was 1,800, current year it is how much? 1,200. Tell me what has happened? Increase or decrease? Decrease in working capital. How much it is decreased? By 600. So minus 600 has been become here. Not it. How do you do? See the logic of finance. People says that whenever increase in working capital, we say it is a good. You say your current asset has been exceeded current liability. That is what current working capital will increase. So increase in working capital is means what? You must have tell me what will happen to the cash balance. When you are increasing your working capital, it means you are increasing your current asset. From 1,000 to 80, you are making 1,400. You are increasing your current asset. Means what? What will happen to the cash flow? Outflow. Cash will become outflow, right? Because what? You are investing more money on stock. And to purchase that stock, closing stock, you need to invest material, you need to invest on labor, so many other things. So cash will become automatically less or not? Tell me. So we say whenever increasing in working capital, whenever there is an increase in working capital, can we say this is investment or not? That is a process of investment. Now you tell me, whenever decrease in working capital, in this case there is a decrease in working capital, it means what? There is a working capital is getting reduced. Now tell me, current asset from previous year to this year it has become less. What does it mean? It is called recovery. Stock was 1,000 rupees last year. Now current year stock is only 500. It means what? Goods are selling? No. Closing stock is less means your goods are getting sold in the market. It means your stock is getting sold. When stock is getting sold means recovery is happening. So cash flow is increasing. So we say whenever working capital decrease means that is a process of what? Recovery. Tell me. Understood everyone? Whenever working capital decrease means recovery. Whenever working capital increase means investment. Now you tell me, you need to adjust according to that. Recovery means cash is inflow or outflow? Inflow. Cash will recovery means cash is inflow, right? Now tell me, cash is inflow means cash balance will increase? Yes or no? Cash inflow means cash balance will increase. So whenever there is a decrease in working capital, you should add. Understood everyone? Now tell me, I am doing more and more investment in working capital. Means my cash is going out. Tell me, whenever investment means cash is become less, you should minus. This is the logic of add and less in working capital. Tell me, whenever investment in working capital, increase in working capital, add or minus? Minus. Decrease in working capital, add or minus? Add. That is called recovery. Is it clear? So now, can we apply the same logic here and calculate the value now? Let us see. So now, tell me, changes in working capital, we have to do here, right? Now tell me, here, this is which year? 2022. Now in 2022, and look at year value. Year 0 is 2022, right? There is no previous value, which first year will become 0, right? So here it will become 0. Now from next year onwards, I can compare with this year 1 with year 0 or not? Yes or no? Now can I compare 1,290 with 1,080? Yes, I can compare. It means again there is a what? Increase in working capital. Tell me, increase in working capital, add or minus? Minus. Understood everyone? So now what is the value will come? Is equal to, how to do this one? Is equal to, select this 1,290 minus 1,280. What is the answer? 10. We say increasing working capital. We say working capital has been increased, but increase, correct, but that actually it is called as what? Minus. So when you are calculating the net cash flows and all, you should minus that 10 rupees. Okay? Now tell me, next year can you do it? Year 2, how to calculate? 1410 minus 1290. So now do it here. Is equal to, take the value 1410 minus 1210. What is the answer? 25. Working capital has increased, but how much rupees? 25 rupees. Next. Can you do it for next year? How it will come? 1450 minus 1435. So is equal to 1450 minus 1435. How much increase? 15 rupees. Again, increasing working capital means investment. Investment means minus. And last year is equal to 1600 minus 1450. What is the answer? 150. Tell me, again increase. But increasing working capital means investment. Investment means minus. Got the logic? Now let us do the next one. Now you tell me according to the format. Cash flow less capex less changes in working capital, then what we get the answer? FCFF. So let us write here free cash flow to the firm. So how to calculate FCFF now? Now here the calculation will come big. Okay. Till now we remember we have not been done adjustment, but we have adjusted cash flow here already, right? So cash flow less capex less or whatever is there. I'll better write here because I'll write here. This is add or what? Less. Anything can happen, no? Okay. Now let us do. How to do calculation of FCFF? Tell me. NOPAT plus depreciation cash flow. Is the concept is clear? Yes, sir. Okay. Next. Now based on this, we got free cash flow, right? FCFF. Now, what is the objective of DCF model? To calculate value of the firm, value of the business. Still, we have just calculated free cash flow to the firm, but we did not calculate what is the value of Sonata company today. That we did not calculate it only still. So we need to calculate what is the value of Sonata, because these are details of Sonata company. Okay. Now, how to calculate free cash flow to the firm is over here. Now to calculate free cash flow to the firm, we need some discounting factor. Yes or no? Now see here. These are free cash flow to the firm, but those are future cash flows or not? 2023, 24, 25, 26, 27. All are future cash flows? Not only. All future cash flows should be converted into present value. Yes or no? So all future value should convert into present value. Now tell me, all of you have studied financial management. You have studied time value of money concept. Okay. Now you see. Suppose if I want future value and interest is paid compoundly, nothing but annually. Every year interest is paid. So to calculate future value and interest is paid annually, what is the formula? We need present value for that first one. Yes or no? To calculate future value, we need present value. Now, interest is paid annually once. So we should take 1 plus to the I power of n. Yes or no? Now, if the interest is paid quarterly, monthly, semi-annually or half-yearly, whatever is it, in that case, formula will change or not? Yes or no? Now, this formula is for interest is paid what? Annually. See the logic, all concept we should remember in finance. If the interest is paid annually and it is compounded, then future values, this is the formula. Now, if the interest is paid half-yearly means in a year, how many times interest? 2 times interest. 6 month month, 6 month month. But in first case, interest is paid only one time in a year. At the end of the year, you get. So in that case, formula will be future value is equal to present value divided by multiplied by 1 plus I divided by what? F to the power of n. So no. Now n again, this is n into what? F frequency is there. Now you see how this logic came. Now interest is paid half yearly. In a year, how many times interest? 2 times. Not only. Future value is equal to present value. Let's say if it is a 10% rate of interest, and that 10% is paid how many times? 2 times. So 1 plus I, that is I is nothing but rate of interest 0.10 divided by what? F. In a year, how many times you are getting interest? 2 times. So frequency will come 2. Now divided by 2. Now tell me, n is number of years how much? 1. In 1 year you are getting how many interest? 2 times interest you are getting. Half yearly, half yearly. So now tell me, n will come how much? N into f. N will come 1 into 2. Understood everyone? This is a formula for if interest is paid annually and semi-annually or quarterly also you can do. No? Tell me, in a year how many quarters? 4. Now you tell me same rate of interest. I will keep it here, and you tell me the answer for that formula. Future value is equal to PV bracket open 1 plus I 0.10 divided by 4. Frequency is 4 times you will receive interest. 4. So divided by 4. N in a year how many times? 4 times. 1 year into 4 times. This is the formula for quarterly. Now this is case of future value. All these are future values, but I don't want future value. I want which value? Present value. Whenever present value you calculate, what is the formula? We want present value, right? So PV is equal to what? You want FV then. If you want to calculate present value, you should have a future value then. Future value, instead of multiplying, we should always do what? Divide 1 plus I to the power of n. You will get discounting factor. Now same formula we should apply here. Now tell me, present value, this is for annually. Yes or no? If it is what? Semi-annually then? Or present value is equal to future value divided by 1 plus I divided by what? F frequency. If it is half yearly, divided by I n into F then. Simple formulas, but don't make life so complex. It's very simple. What you are doing in the future value, make it in the present. Two source, equity and what? Debt. So in that case, how to calculate WACC formula? Cost of equity into weight of equity plus cost of debt into weight of debt. Simple. Cost of equity into weight of equity plus cost of debt into weight of debt. Now you tell me, we need cost of equity, right? First one, KE. So always there are two formulas for to calculate KE. One is dividend growth model and one is CAPM model. But best model for calculating cost of equity is always CAPM model, which is called capital asset pricing model. How to calculate cost of equity according to CAPM model? KE is equal to RF plus beta bracket open RN minus RF. This is the formula to calculate cost of equity. RF plus beta bracket open RN minus RF. What is RF? Risk-free rate of return. Government securities risk-free. No, there is no credit risk. There is no default. Guarantee government will give money back to you. That is called risk-free. Beta is a systematic risk of market. So beta. Let us see one by one. We need all these things calculation. Next, cost of equity, how to calculate? You got to know. Cost of debt also you got to know. Please concentrate here. Next one. But we need weight of equity and weight of debt also, right? Yes or no? Now how to calculate? Can you see here this information of Sonata company? These are hypothetical examples. Equity is how much? 450. Debt is how much? 150. What is the total sources of fund? 600 rupees. So can I write here total sources of fund? Total sources, or we can say total capital also. Total capital is equal to sum of both. Sum, open the bracket, select these two values, close the bracket, enter. You got 600 rupees. Now tell me, we got 600 rupees of total capital. Can we calculate weight or not? Yes or no? Can we calculate weight calculation? What is the 65? So let me take here 5.65 plus, what is the plus? Beta. B stands for beta. Beta is how much? 1.15. So take this beta. First take RF, then plus beta. Then after that, what is the next one? Bracket. Bracket means into Rm minus Rf. So right here into bracket open. Again, Rm is how much? 14.65 minus 5.65. So write down here minus 5.65. Close the bracket. Is it applied all the formula here? What is this? Rf plus beta into Rm minus Rf. That is where you get cost of equity. How much percent? 16% is my cost of equity. 16% is as good as 0.16. Understood everyone? 0.16 is nothing but 16%. So my cost of equity is 16%. We got that answer which we need, very important for WAC. So we got KE, right? Next is what? WE. WE also we got, no? Plus what? KD. We need KD value now. So now let us see what is the value. So just go down and calculate here KD, K and D. What is the formula? I told you interest bracket 1 minus T. So let us take here interest. What is the rate of interest? 12.3. Can you say debt is carrying some interest or not? That is always considered as rate of interest. Now 12.3, if I convert into here, then open the bracket. What is the open the bracket? What is the value? 1. So 1 you should type here. 1 minus. Can you tell me tax rate is how much percent? Can you see here? Just see here. How much percent? 35%. Tell me, convert into decimal. 0.35. So we will write here minus 0.35. Close the bracket and then press enter. Can you get the value? It is how much? 0.07. Now, if I make this value into 2 decimals, if I want to make it into 2 decimal, then how much it will be? 0.08. Okay. So cost of debt also you got 0.08. Cost of equity also we got. Weight of equity also we got. Weight of debt we also got. Can we calculate cost of capital, overall cost of capital? Let us calculate now. So is equal to, how to calculate? We want to keep 3. We'll keep 3 decimal. Usually in classroom we always tell our students to keep it 3 decimal. Okay, let us keep 3. So select all. These are all my present value now. I have to know what is the sum of all this. So it means total of all these cash flows. You should take now. Understood? Theory, what we are teaching, we are doing into practical. Now let us do how to do this one. So we should apply the formula sum here. So now how to do the, just see here. I'll select till here, merge and center, because I need sum of present value of cash flows. So now here I need last year, what is the total, right? So is equal to sum of all PVFCFF. So is equal to sum, open the bracket. Now tell me, sum of all the cash flows, right? Yes or no? So from 610 till 4377. Then close the bracket, enter. What is the answer? 17,787 rupees. Understood everyone? This is called the value of all the cash flows. But once again, that is not a true value of the firm. There is something called as terminal value also. We have studied in theory in the classroom, they must have got terminal value. How to calculate now? Next one, terminal value. Next, you have to type here terminal value. How to calculate terminal value? First, select all this thing and take it and select this one. Now, what we should do? Terminal value means that value when the company want to exit from the, after 5 years, 6 years, they want to exit. From that time, what will be the end of the life of the value? That is called terminal value, forever value. You studied in financial science, there is something called a perpetuity and annuity, two concepts. Annuity series of cash flow which you know the term. But in perpetuity, series of cash flows will be there, but there is no term. So cash flows will be for forever. So we should apply the formula for perpetuity here then. So now what we should do, take the terminal value, but somewhere if you can see here, I have written here, if you are concentrated carefully, can you see here? Can you see somewhere called as what? Growth rate. How much percent? 5%. Remember, there are three types of growth rate. First one is something called as company's growth rate. This is company will grow after a certain period of time constantly for 5% growth. Company for a certain period of time will grow for constantly at the rate of how much percent? 5%. If that growth rate is also not given, company's growth rate, then we take something called industry growth rate. So not belong to which industry, you have to take that industry's growth rate. Even though if you don't have that industry growth rate, then you should take always economic growth rate. So how many types of growth rate you got? Three types of growth rate. First one is company's growth. Company will grow at the rate of some percent. Then if you don't know what is the growth rate of my company, then compare with your industry then. Even though if you don't know industry is what rate we are doing, at least you should grow at economic rate. Simple. It's called growth rate. And how do we calculate growth rate? There also there is a formula. G is equal to B into R. G is equal to B into R. So growth rate is nothing but whatever the retention rate and whatever the dividend payout ratio, earning per share, and this is your retention rate. We should take that one and calculate growth rate. But we don't have here to calculate growth rate. It is already calculated. So now let us apply the formula for growth rate. Now you tell me how to use this growth rate over here. We assume that, okay? We assume that. Can you see all of it? Just let me highlight, very important for you to understand here. This FCFF and this is your PV FCFF. Very important. See, today world famous model is this model. To value the company. I am calculating the value for 100 years, 200 years, even though the company is going to exist. What is the today's value of that 100 years? That is called discounted cash flow model. Even the company is for 5,000 years. Next 5,000 years, the company is going to survive. Today's value I am calculating. What is the after 5,000 and today's value of 5,000? That is the value I am calculating. So after 5,000 years, if the company is going to still survive, that is called terminal value. And today's value of that terminal is called as present value of terminal value. You understand? So you should understand theory first, very important. So now let us do, I assume that whatever the last year my cash flows are there, no? This will grow at the rate of how much percent? 5% every year. So now what we should take, let us see here, calculation is equal to, you have to type how to calculate the terminal value. First, you should take last year FCFF. Last year FCFF. What is the last year FCFF? 8428. So it is like this. FCFF 1 plus G divided by K minus G. This is the formula. What is FCFF? Free cash flow of the firm plus into 1 plus G. At what rate it will grow? Divided by K minus G. You will get the present value of terminal value. Okay. Now let us see. First we should calculate what is the growth of that last year cash flow. How to calculate? Take minus 0.05. What is the value? Terminal value is how much? 63,207.25. This is the terminal value of the company. Now you tell me, this is the value of the terminal value. This terminal value we have to bring it to present value of terminal value or not, right? So the next calculation will come over here. PV of present value of terminal value. How to calculate present value of terminal value here? Again, this value, yes or no? Which value? The terminal value. Now, this value, we don't know what is the discount. With discounting rate, we know 14%. This value of terminal value, we have to bring it to present value now. That is called present value of terminal value. We have taken the last year cash flow, last year discounting rate we should take. Yes or no? Because we've taken the growth of last year free cash flow, no? So discounting rate also should come for which year? Last year only. So this value into which What is the last year discounting factor? 0.519. So almost how much? 32,827.869. Then last we can calculate value of the firm. So here we can take this value. Now how to calculate? Sum of PV FCFA plus present value of terminal value. This value plus this value, you will get somewhere close by nearby answer. Got it, everyone? So now we will take a break for 3 minutes. Next model, comparable company analysis. Okay. Let us do this simple model, how to calculate this. In comparable company analysis, what we do, actually, what is this model? One small 1 minute introduction I will give to you, then we can go on. There are two companies, two or more than two also can be. One company is called target company, and remaining companies are called similar or competitors company. Okay. So what we'll do in this, I want to calculate today's value, my value of company without taking, I don't know what parameter I should take to value my company. So what I will do, I will take some more which are very close to my company's business, very near. Let's say Sonata company. I want to calculate what is the Sonata company's value. So what I will do, I will when I'm doing the same business in the market, economy or not, ultimately, right? So I don't have any parameter. Let's say I have started very new. After 1 year, I completed, but now I am thinking to sell off that business. Then in that case, what price I should pay? Whatever nearby who are doing the business, on that price we will take it and sell it the business. That is called parameters. So now tell me here, which is our target company? ABC. I want to calculate the value of which company? ABC's. Then these are all the remaining companies which are competitor of ABC then. Now how to calculate? Okay. First thing. What is the first thing is? Wherever there is a blank, that columns we have to fill now here. This is called market price. This is called shares outstanding. What we have to calculate? Equity value. How to calculate equity value? 125 into 11.44. Nothing but shares outstanding into market price. Nothing but market capitalization is also nothing but equity value or not? Listen. So now tell me what is the formula? Is equal to select this company, select that first share price into 125. What is the answer? 1430. Is it clear? So now if I take market data, then this is my value of the company. Equity value is as good as company's value only. Now you tell me, can I calculate remaining company's value? How to calculate? Just drag it down. All the company's value we got or not? Because all the company's share price is there and all the company's outstanding shares is also there. Multiply, you will get the equity value. This can be one year Viva question. How to calculate equity value? Multiply outstanding shares into market price per share. Now, what is the next one? What is the next value? Enterprise value. That is also called EV value. What is enterprise value? Enterprise value is nothing but equity value plus debt value is nothing but your enterprise value. But the formula for enterprise value is EV is equal to enterprise value is equal to equity value plus debt value minus cash and cash equivalent. Is this clear? But now here there is no cash. So directly I can take equity value plus debt value. That is called as which value? Enterprise value. So now tell me what I should type here is equal to equity value plus debt value 2170. Is it clear? Now remaining companies, how to calculate? Drag it down. Okay, next. Now these are financial data which is available. Revenue is given, EBITDA is given, net income is given. What is the next one? Valuation. In valuation, these are further ratios. EV divided by revenue, EV divided by EBITDA. EV means not equity value, it is an enterprise value. PE means price to earning ratio. How to calculate? EV. What is EV stand for? Enterprise value. What is the enterprise value? 2170. Right side and in the left side, there are some parameters are given. Now, what are those parameters? High Q3 means quartile 3. Q3 means quartile 3. Average, median. Q1 means quartile 1. Low means minimum value here. Now, how to calculate first high? High means maximum value. Now, tell me if you want to calculate your value of the firm. This is where we calculating, right? High. High means this side we should calculate, right? Now, when you are calculating high value, high means if I take this ratio as my parameter to calculate ABC company value, then whichever the highest time is there, that will be the value of the company. If I take EV divided by EBITDA, whichever highest value of that ratio is there, that will be my value of company. If I take P ratio as my parameter, whichever highest P ratio is there of the similar companies, that will be my value of company. Now, what we should do? High. High means maximum value. So what we should type here is equal to max. Max means maximum value. Open the bracket. Select from here till down. Among this, whichever is the highest, that will be my valuation model. So close the bracket, enter. So can you see 3.0? Among these all the value 3.0x is the highest value or not? That will be the one of the parameter to value my ABC company. Now same thing if I take the remaining. What I can do here, instead of typing multiple times max, can I drag it right side? So just drag it which side? Right side. So that will be the value. So now you see, among this all, which is the highest? 8.5x. Among this one, which is the highest? 11.6. That is a parameter. I can take highest value of this ratio and take the value of the company. Now next. But sometime highest is also controversy. So what we'll do now? We'll take quartile 3. Okay. Now we must have studied of Q1, Q2, Q3, Q1, Q2, and Q3. Quartile 1, quartile 2, quartile 3. Quartile 1 is always equal to 25. Then 50, then 75. These are quartile values for each one. Now, what we'll do now? We'll apply here. First is what? Q3. Okay. So Q3 means the third one. Let us see. Q3 here, come here, this side. So what we'll type here is equal to QARTILE, quartile. Yes or no? I want quartile, right? Now bracket, what it asking? Array. Array means once again from this value only. Yes or no? Quartile 3. Then press comma. What I should select? 3 into 3, comma 3. Bracket close. What is the value? 2.7x. Understood? Quartile. Select the range, comma 3. There was a, if you type 3, there only it will show 1, 2, 3. Quartile 1 means how much, 2 means how much, 3 means how much. Now can I drag it right side? You got the value. Again, quartile 3. Do you think it is a good ratio for taking for valuation? No. So again, we have another parameter called as what? Average. Average means mean value, right? So we'll take average. Let us see. So now tell me what I should type here. Is equal to average. Average of all. Among this, I will take best is average value. You take bracket close, enter. What is the value? 2.3. The average ratio for E by EV revenue is 3 point value. So now 2.3 is the average value of first parameter. Can I drag it right side? 6.9x, second one. And for P ratio is how much? 8.9. So whichever the highest is there, can I take one of the parameter now, as of now? I will always try to show more company, my company's value has more only, no? Why I should say less? So whichever highest ratio is there, that will be the value. But don't conclude right now. We have one more parameter called as what? Median. Right? How to calculate median? Again, we have formulas for that also, right? Median. So what we should type here next is equal to median. Open the bracket. Take all these values. Close the bracket. Enter. 2.4. Can I drag it right side? This is the values. Now, median, once again, it is not a good calculation. Can we take the next one is what? Q1. Quartile 1. So what I should type here? Let us see. Is equal to quartile. Look at here. Open the bracket. Again, this array, right? These are my arrays. Then press comma. Now this time, how much I should type here? 1. Close the bracket. Enter. What is the value? 2.2. Next, what we should do is drag it right side. Now, last one. What is that? Low. Low. Whichever minimum is there, that is one parameter I am taking. So what I should type here? For high, I type max max. For low, mean min minimum value. Min mean. Open the bracket. Take these values all. Close the bracket. Enter. 1.1. Minimum is 1.1. Can I drag it right side? Based on this, just drag it right side. You'll get the value. But now, the question comes here. All those Q1, Q3, high, median, average, and low. Which should be the text always? What do you think? What is the best thing? Average is always the best. Rather than taking all Q1, Q3, and median value. Average is best. So on an average, that will be the value. So now what we will do now here? Just we'll simply highlight the average value. So can you see here? This is average value. So shift right side you take completely. These are all my average value and highlight. So now to value my company, I am taking the average of all those parameter ratio. So now here we taken the average. So if I take P ratio as average means 8.9 times. So now let us calculate now next one. Now can you see here? Now we have to do the last final step calculation. We are calculating which company value? ABC company's value. Enterprise value, debt value, market value, shares outstanding, value per share. Not value per share means what is the total earning per share, whichever highest, or value per share, whichever highest will get, that is the best model. That is the ultimate result I am telling you. So let us do now. First we should calculate which value? Enterprise value. How to calculate enterprise value? Can you tell me? First you should take which value? Enterprise value. Now first we have average here, right? 2.3, because that is a parameter I took here. 2.3 into which value? Revenue value. First we should take revenue value, right? Because this is divided by what? Revenue, no? EV divided by revenue. So average value of that ratio multiple time into revenue value. So we'll take revenue of which company? ABC only. 1963. That is the value. Next, what is the next value? Net. After this, what is the next one? Below this, enterprise value we got. What is the next value? Net debt value. Now tell me, ABC company, can you see debt value is how much? Only ABC company you see. 740 rupees. So ABC company's debt value is equal to 740. I should take this one. Enter. That is the debt value of ABC company. Next, what is the next one? Implied market value. How to calculate implied market value? Now you see. Tell me, EV. EV means what? Enterprise value. Enterprise value is nothing but equity value plus debt value, right? Yes or no? That is what we discussed. Minus what? Cash and cash equivalent. But now we don't have cash and cash equivalent. We will limit that part now. But EV is nothing but equity value plus debt value. Now I want to calculate which value? Equity value, right? I have enterprise value or not? I have enterprise value. So now tell me, enterprise value how to calculate then? EV minus what? Debt then? Yes or no? So now tell me, implied market value is nothing but total company value here and then total here debt value and total market value. Now how to calculate here? Take the value. is equal to, it will add, right? It will add both. Sorry, it will add both. So EV plus debt is nothing but your total market value of the company or not? It's nothing but equity value plus enterprise value then. So 1963 is my which value? Can you see this? 1963 is which value? Enterprise value. And debt value is how much? And market value is how much? How to calculate now this one? Formula is what? Equity value, sorry, enterprise value is equal to equity value plus what? Debt value. But now I have enterprise value already is there and debt value is also there. But I want to calculate which value? Market value. How to calculate? Is it plus or minus there? Minus. We should take minus actually. So it means your enterprise value minus debt value, you will get which value? Market value and nothing but implied market. Let us come here. So take this 1963 minus 740, you will get 1223. That is the value. So how do we got 1223? Enterprise value minus debt value, you will get market value of the company. Got it? Now from reverse to bottom to top, when we are going, we should add it. So what is enterprise value then? What is enterprise value then? Equity value is nothing but market value or not? Equity value plus debt value will give you enterprise value then. You understand what I'm trying to do? Now tell me, how to calculate market value then? EV minus debt. EV minus debt. Now tell me, enterprise value is nothing but what? Equity value, which is nothing but market value of equity plus what? Debt value of the company. You will get the total value. So now next is what? Shares outstanding. Let us do that. What is the share outstanding here? Of which company? ABC company. Can you see here? ABC company, how much share outstanding here? 125. So here is equal to, take this value 125, enter. Done. Now can we calculate value per share? How to calculate value per share? Market value.
Share price.
Yeah, market value divided by share prices or into. The market value we want value per share. Share outstanding is there, right? Total equity value divided by number of share, you will get earning per share only, right? It's same like your earning per share formula. So what we should do here, take this value is equal to, take 1223 divided by 125. That is the value per share of the company. That is how much? 9.79. This will everyone. Okay. Now, same thing you should apply logic for this one. What we should do the calculation now, next one in second case. Here also. Another. We'll finish this. Only two columns are left. Is it fine?
Yes.
Okay, next. What is the last parameter? Second last parameter, EV divided by EBITDA. Again, what is the average of the second parameter, EV divided by EBITDA is how much? 6.9. Tell me now what I should take here. 6.9 into revenue or EBITDA? EBITDA. Here EBITDA will come, right? EBITDA of which company then? ABC company. Can you see EBITDA of ABC here? 305. That is the answer. Now tell me, debt is remains same only, right? Debt value is same as good as this value, 740. Now tell me, what we can calculate this with this market value. Got it? So now market value, how to calculate? This value minus debt value is 1335 and number of share outstanding is 125 of ABC only. So they take this value 125 only. Now finally what we can do, 1335 divided by 125. 10.84. Make a note this, you have to write in your record book. Okay. Now last one. Debt will remain same only, right? For next parameter also the debt is same only. So is equal to 740. And now shares outstanding is also same only, right? Next, what we need to calculate then? With this earning per share, market value can we calculate? How do we calculate now here? Market value here. Last parameter, right? Enterprise value. How do we calculate here? Average of first this ratio we have taken. Then two things are remaining. One is we cannot calculate last implied value per share unless we have the market value per share. Market value that we cannot calculate. Now, this first we have to calculate which value. Okay, can we calculate this value? What is this? Make a note of this for your understanding. Implied market value. Implied market value. We can calculate first. Implied market value. Take that parameter. So is equal to what we should take? Average. First we should take average once again, right? We are taking the same parameter. 8.9 into net income. So what is the net income of ABC? 135. So we get which value? Implied market value. How to calculate implied market value? P ratios average value into net income of ABC company. You will get the value of net market value. Now tell me, can we calculate enterprise value then? Reverse we have to go. So is equal to what I should do here? When we are going bottom to top, we should add. So now can you tell me 1198 plus 740? We will get 1938. And finally, can we calculate value per share? Is equal to 1198 divided by 125. You will get 9.58. Got it now? So among this, once again you choose which is wherever there is a highest implied value per share, which is giving me more value per share, that will be the best parameter for valuing my ABC company. So EV divided by EBITDA is the best now. That is the ultimate conclusion from this model. That is CCC model. Got it, everyone? That's all. So thank you very much.
How will be the exam conducted, sir? Like questions, they will print in paper and give, or will it be filled in Excel sheet, sir?
No, they will be not filling Excel. You have to create a template. You have to create a template, and based on the template, you have to answer them. They will not give template at all. In question paper, template means it will be 6-10 pages question paper only will be there.
How many models they might ask?
Among those 6, they can ask any one of them.